to meet their goal of reaching 25% by next year, right? So that's their goal. Their goal has been to get to 25% by next year. And so 14% in this past year, about 7% in the year prior. So they're getting towards their ultimate goal. Now, these are low-end iPhones. These are not the high-end Pro phones with the stainless steel or the titanium and what have you. These are the aluminum phones. At some point, the hope is to be able to move some of the high-end phone production. But given that these are the lower-end phones, it's quite significant how much revenue they're bringing in at this point from India as well, and how much revenue they're booking coming out of the factory in terms of iPhones produced there. So it seems like they're well on their way to making that move out of China.
Hey, Mark, I mean, how long have iPhones, I mean, this isn't new that they're making certain products in India. Correct me if I'm wrong here, but remember that iPhone 5C, that candy-colored iPhone, lower-end iPhone, was that made in India years ago?
I don't believe they made the 5C in India, but you're right in that this push into lower-end iPhones did give them the opportunity to begin expanding where they're producing iPhones, right? They did some trial production in Brazil. Okay. I think for that model specifically, they still have some production in Brazil, but India is where a lot of that low-end production is happening now. There's a new iPhone SE coming out around the spring next year, and that is likely to see some production happen in India eventually as well. So certainly India is becoming a much bigger part of the Apple story. Now, here's the thing to note. It's really only the iPhone in terms of Apple products being built in India. At some point, are we going to see some Macs being built there? Are we going to see some iPads or Apple Watches being built there? From what I understand, there are some of the underlying components for the other Apple categories being built there. But at this point, it's really the iPhone in terms of final assembly.
Well, as someone who has sensitivity and insight to all things Apple, Mark, what do you think in terms of where the company, might continue to move manufacturing, or will they continue to move manufacturing out of China?
I think they're going to try to get as much as possible out of China, particularly for new devices, which of course makes sense. I think some of the more complex products, like the Vision Pro, for instance, is an extraordinarily complex piece of electronics. Mm-hmm. That's something I think they'd be hard pressed to move out of China, given that the skill set and the manufacturing work out of China is, probably a couple of years ahead of other places. But what you're seeing is more AirPods being made in Vietnam, more iPads being made in Vietnam, more types of Macs being made in Malaysia. You're seeing, limited scale production in Thailand. Obviously, they want to move beyond the phone in India. So certainly the plan is to get production built across different geos. And if you think about this transformation, it's a much bigger story than just a China story. Obviously, you had the vast majority of Apple production, pretty much everything being done in one locale. And that has created serious problems for Apple in the past. You have a virus, right? That is going to shut down factories. And if you are in one country, right, and that one country has the lockdowns as China did through 2022, and there's an issue, that's going to shutter all your production and mess up your financial results and your ability to create product or produce products.
How we say,
and so if you...
Yeah, no, go ahead. Forgive me.
And no, I was going to say, and if you now have your production for devices across not China, but China, Malaysia, Thailand, Vietnam, India, 5 countries, maybe 6 countries, maybe more than that, you're in pretty good shape if there's an issue. And, it's been Apple's responsibility for a while to reallocate, redistribute their production, not only because of geopolitical issues in China, but because from a business standpoint, you never know if there's going to be an earthquake. You never know if there's going to be a pandemic. You never know if there's going to be natural disasters or weather that knocks out production. So they've been hurt too many times by relegating production to one center. And so, it's been time to do this for a while, and it's a good thing for Apple shareholders and customers that they're finally doing it.
I totally get it. If I was sitting on the Apple board, it'd be like, you have to do this diversification. Having said that, how does it complicate the relationship that Apple has with President Xi and all others of the Chinese Communist Party, and also as it continues to, value China as an important market for it?
Yeah, obviously they're not happy about it. Yeah. I guess the silver lining for Apple is that sales are falling in China anyways. And it's not like they're moving out and now sales are falling. The sales have been falling, for several quarters now. So certainly it's not a good look for Apple in China, but I think that Apple's still driving so much business there. They'll be able to make it work, despite the tensions. They're continuing to open many retail stores in China, R&D centers, spinning up new projects in China. Apple's not leaving China. I think that's what has been overblown in the reporting on these types of situations. They're not leaving China. They're diversifying outside of China. There's still going to be a production center in China, and I would say that the bulk of manufacturing will still be done there.
Well, so that's my last question for you, Mark, is if you think about the end case here, when Apple is happy with the diversification geographically, at least of its supply chain, what would you venture to say would be the portion of Apple products that are produced still in China?
Yeah, I would imagine a third to half of all Apple products will always be built in China. The issue is really that other 50 to 66%, right? The issue was having 100% of manufacturing in one place. There's nothing wrong with having a third to half there as long as you have another half there. I think the big story is what happens if something goes down with Taiwan and all the chips are produced still in one place. It doesn't matter how diversified your iPhone assembly is if you can't get any chips because TSMC is down. That's the next thing. Probably the more important thing they need to actually figure out.
Yeah, it's why we watch as TSMC starts to build plants around the world, or continues to. Hey, Mark Gurman, so appreciate it. Bloomberg News Chief Technology Correspondent Mark Gurman joining us from LA. This Bloomberg exclusive. Check it out.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Yeah, thank you so much for that update, Charlie Pellet. Well, the rise of remote and hybrid work post-pandemic has had some serious implications to owners of office buildings, banks who lend to them, and the cities that rely on tax revenue from commercial properties to fund city services. Boston is trying to address that last one by raising commercial property tax rates temporarily, this in an effort to help protect homeowners from the brunt of the historic slump in office property values.
All right, well, Brooke Sutherland writes about the proposal that could potentially deepen commercial real estate pain in Boston, where nearly a quarter of its 69 million feet of Class A and Class B office spaces are unoccupied. That's a lot. Brooke is, of course, Bloomberg News Boston bureau chief and also the writer of the Bloomberg Industrial Strength newsletter. She joins Tim and me from our Boston bureau. Hey, Brooke, so good to have you here. Tell us about the situation in Brooke, in Boston, how dire it is in terms of revenue from commercial real estate taxes and what's being considered.
Sure. I mean, obviously, remote work is not just a Boston-specific issue, but what is unique about Boston is its dependence on commercial property tax revenue. This is significantly outsized relative to other cities, including New York, Miami, Washington, D.C. Boston depends on commercial property tax revenues for more than a third of its intake. And so this is a serious issue facing the city, and the property tax system is designed to be very stable. I interviewed the CFO of the city, and she compared it to a pie that stays the same size regardless of what happens to property values. It just might get sliced up a little bit differently. And so what they're trying to avoid is having that slice that the homeowner has to pay really swell and be outsized so that people are facing sort of a shock increase in property tax rates. And so they want to reallocate, shift some of that burden back to the commercial property sector. But of course, that sector is facing a decline. And one of the things that you risk doing by raising those rates is just precipitating that and accelerating that decline.
Yeah, so this might be, homeowners might be in favor of this because their property taxes won't go up as much, Brooke. But what do the folks who own office buildings think about this?
Sure. I mean, I don't think they're going to be thrilled. I mean, and certainly if you're looking at, the value of your property being down because those floors are unoccupied, you don't want to have higher tax rates because as a building owner, you can pass those on as rent. But when those leases come up again, that's one more reason for somebody to think about not continuing to occupy the space that they have in an office building, or maybe thinking about shifting their office to another city. And one of the things that's unique about Boston is that we do have Cambridge right across the way, which is very close and also has a lot of vacant office space. And so I think that's a risk as people think about where they put their offices, or even if you are maybe potentially thinking about going remote, you don't want to give people more reason to do that and move away from having office space in Boston.
I was surprised to find that Boston's still facing record vacancy rate. Carol mentioned one of the statistics that you shared in your piece. Almost a quarter of its 69 million square feet of Class A and Class B office space is unoccupied. That's according to the head of research over at Collier's Boston office, and that data goes all the way back to the 1980s. What's going on in Boston? I thought this was an area where life sciences was so huge, and life sciences is a very stable tenant when it comes to commercial real estate.
It is a stable tenant, but I think nobody is immune to these trends, around remote work, and we've seen the persistence of hybrid work. And you think about, a city that has less than ideal commuting circumstances sometimes, and housing affordability problem, and there's incentives to not have people coming into the downtown. Now, of course, the city is trying to combat that and investing a lot in revitalizing those downtown spaces, making them more attractive for people to come to work here, but it's certainly a significant issue. And I think, one of the risks is that as we move further out from the pandemic and some of these leases do come up for renewal, it's sort of a rolling effect. It's not like you could really get out of your lease on, April 1st, 2020 and rethink that. Some of these people have been locked into contract for a while and may just now be making some of those changes.
What's interesting about this is that it's not the first time, right? It's based on a precedent, if you will. And Boston Mayor Michelle Wu, what she's looking to do, you go back to the dot-com era. Talk to us a little bit about that, Brooke, in terms of what folks were trying to do at the same time because of revenue hits that followed after the dot-com bust.
Sure, and I think, that's one of the selling points for this from the city's perspective is that there is a precedent here. Like you said, they did make a similar adjustment to how the tax burden gets allocated coming out of the dot-com bubble burst when they realized that property tax owners were going to be hit with a really significant increase in rates to sort of maintain that level on revenue. And so there is a precedent here that helps because the city's plan also has to be approved by the state. And so in terms of a sales pitch, I think the fact that there is a history here that it wasn't in fact permanent, because I think when you talk about temporary tax changes, people always get a little bit nervous about, well, how temporary is this really going to be? And so I think that does help, but I think obviously the circumstances are very different coming out of the dot-com bubble burst to now. I mean, you just had such a rise in remote work, and we've seen how successful that can be during the pandemic. And I think that the factors at play here are significantly different, and there's a longer-term issue that the city will ultimately have to grapple with of how do you fill those office buildings up? How do you get rid of that record vacancy rate? Because there's a risk that the pain gets worse before it gets better as some more of these leases start to turn, as some of the buildings actually sell and you see these market values crystallize at significant discounts to where they were a few years ago, that will force a change in the assessed values of these buildings and sort of precipitate some of these tax issues that we're talking about.
Just as Brooke is on our air talking about this, our own Naha Katan reading a story that is shooting up to the top of the most read right now about New York City's return to office rate nearing 80%. Wall Street firms including Goldman, JP Morgan have helped push New York City's return to office rate to almost 80% of its pre-pandemic levels. It's a rebound, Carol, that's also seen in Miami, according to at least one measure.
Yeah, it's really fascinating, right, to see that. But I do wonder, right, as we try to figure out ultimately all this commercial office space, and as Brooke, as you rightly point out, it is different from the dot-com, is that people are working differently in these major cities. They have an option at a lot of businesses to work at home, and that maybe they don't need as much commercial office space. I am curious if this doesn't go through, what it means for Boston's fiscal picture.
I think then you have to start worrying about, well, who does bear that tax burden? Is it the homeowner, which of course would be a very politically unpopular move, especially in a city like Boston that does struggle so much with housing affordability. The city is also somewhat unique in that they're rather limited in their options for raising taxes as far as local or sales taxes. And so you would again have to sort of appeal to the state for some kind of relief. Now, what that looks like, I don't know whether you try to increase rates on sort of tourism activities. Of course, Boston Boston is also home to a lot of nonprofit institutions, specifically in education. Could you look for some sort of tax or some sort of payment in lieu of taxes from some of those institutions? There are other options, but none of them are very easy, and none of them are quick either.
And you can't help but feel that there's going to be some kind of dislocation somewhere felt, and whether it's on the municipal level or whether it's on the commercial real estate level and investor level, it's pretty rough.
Housing's expensive there. I'm just going to throw it out there. Convert some of them to homes.
They are working on that. They're working on that. They're trying, but again, that's also a little bit easier said than done.
Yeah, we've spoken to some designers about this, Brooke, in the past, and there are some buildings, office buildings, where it just will not work. It does not make sense to do it for plumbing reasons, for where the windows are, for the building footprint. But some of it can be done. So it's good to see that it's happening in some cities at least.
Maybe they need to talk to those CEOs at the financial firms in Wall Street. Like, how are you getting people back to work? Because it feels like they can be aggressive at sometimes. Brooke, thank you so much. Really appreciate it. Brooke Sutherland, as we said, our Boston bureau chief, also writing, of course, the Industrial Strength newsletter here at Bloomberg, joining us from our bureau in Boston. This is an interesting story, though, that you highlighted.
Yeah, so I just mentioned this. The data comes from Placer.ai, and what it shows is that New York and Miami's return to office is close to 80%. The nationwide average right now is 63%. And you go down the list here in this story that I mentioned, Carol, Dallas, Washington, Chicago, Los Angeles, San Francisco are all on the list. Boston right now, Boston nowhere to be seen on this list, but I think that doesn't highlight, that doesn't necessarily say it's not on the list.
Well, and this company saying in this report that put out these numbers, the analysis suggests that the finance sector has indeed been an important driver of office recovery. Cities with greater shares of employees from this sector tended to experience greater office recovery than other urban centers.
In other words, if you work at a bank, get back to work.
Placer.ai, their nationwide office building index, they did it. Well, I think it goes back to what Steve Cohen said about, saying we could get a 4-day work week, but he said those folks in the market, they got to be there 5 days a week, basically.
Good point. Well, somebody who is at the office 5 days a week is Amy Morris. She's at the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden and Japanese Prime Minister Fumio Kishida have agreed to start a new joint air defense strategy with Australia. This is to counter China's aggressive military threats in the Pacific.
For the first time, Japan and the United States and Australia will create a network system of air, missile, and defense architecture. We're also looking forward to standing up a trilateral military exercise with Japan and the United Kingdom.
The leaders met for a state visit at the White House today, where President Biden described the relationship with Japan as a monumental alliance between our two great democracies. Donald Trump says an Arizona law that criminalizes nearly all abortions goes too far. He called on Arizona lawmakers to change it, while also defending the overturning of Roe v. Wade that cleared states to ban the procedure. Arizona's highest court yesterday ruled an 1864 law that bans nearly all abortions is now enforceable. Trump faces some more political pressure on abortion rights. Democrats hope this will be a defining issue in November's election. Federal investigators looking into what caused a ship to crash into a vital Baltimore bridge last month are now honing in on the vessel's electrical system. National Transportation Safety Board Chair Jennifer Hamady says that's not all.
In addition to that, our Office of Highway Safety team is really focused on pier protection, looking at the original bridge design and how it would be built today under today's standards.
Now, just before the ship crashed into the Key Bridge, this was on March 26th, it could not maintain its desired heading after experiencing a loss of propulsion. The reason for that failure, though, remains under investigation. That, according to National Transportation Safety Board Chair Jennifer Hamady. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market with the Dow, the S&P, NASDAQ, all very much in the red. Small cap shares particularly hard hit today. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Afternoon, Charlie. That's right. U.S. stocks have been under pressure since that hot CPI data pre-market. Dow is currently down 470 points. At its worst was down 579 points. S&P's dropped 55, while NASDAQ is lower by 1%. The U.S. 10-year yield spiked to 4.56%. Gold sinks 24. Oil is in the green, and Bitcoin is higher by 0.4%. Among the main 11 S&P sectors, only energy was in the green. Real estate and utilities led to the downside, and leaders to the upside in the Dow. Walmart and Chevron, Home Depot and Intel each fell 3%. Regarding earnings, Delta Airlines beat estimates, and in deal news, Alpine Immune was said to weigh options after takeover interest. And wrapping things up, NVIDIA was a bright spot today, gaining 2% amid weakness in the semis. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up the Wednesday trade. This, what's been another busy day, no doubt about it, but we did get a higher than expected forecast, if you will. Hot inflation print, that was this morning. Then we got Fed minutes. Again, the rethink, Tim, in terms of what happens when it comes to the Fed cutting rates. Probably
Why don't these analysts just...
Not much this year.
Why don't these analysts just raise their expectations?
About what?
About what's going to happen when it comes to inflation. Like, why don't they increase, like, okay,
they're looking at
it came in
metrics
hotter
leading
than
up to it.
expected.
Yeah.
Well, you got to expect it that it's going to be hot.
Let's ask our next guest about what it means when it comes to forecasting. Penny Pennington is in the house. She's CEO over at Edward Jones, joining us here in our Interactive Broker studio. It is interesting. Forecasting, not a perfect science. You guys have to deal with it, too, in terms of what you think is going to happen with the markets. What do you feel like you can kind of securely hang your hats on when it comes to the investment environment this year?
Well, what you can securely hang your hat on is that we don't have a crystal ball. And so, as one financial advisor I talked to this morning said, a good plan is better than a poor prediction. And so our financial advisors work with 8 million clients. We engage with 500,000 North Americans every week. So you're right to ask, what is the pulse of North America around what our clients are thinking?
What are they thinking? I love that.
So
Tim and I both love that perspective.
Inflation is not exactly how they come at it. They come at it with questions like, how am I going to be able to afford health care in a long life when healthcare inflation has been going up for a long, long time? And Matt, the financial advisor I was talking to today, Matt, what I bought at the grocery store 3 years ago that cost $100 now costs $130. Is that in our plan? Well, absolutely, it's in the plan. So what we talk with our clients about before we talk to them about what's going on in the stock market or what's going on in inflation, we say, what's important to you? What are you trying to accomplish, and over what period of time, and how much risk do you want to take doing that? And our clients are multi-dimensional people and families. They've got lots of goals, short, medium, and long term. And so when we have a day like today, or a year like we've had, or the last 5 years like we've had, we work with our clients on their financial plan, and we flex it. We say, what would happen if we saw a longer-term downturn in the equity markets? What would that do to your investment plan, and more importantly, what would that do to your life and financial plan?
You know, I'm hearing you say this, and it's interesting because you said that they're not coming at it with inflation being high. They're coming at it through the lens of, okay, well, we know the cost of medical care is going up. We know the cost of food is going up. That is inflation.
Exactly. That's right. They talk about it in terms of what it costs to live the life that I want to live.
And that's, I think, the way that it manifests for a lot of people, apart from gas prices, which are certainly volatile. I'm interested, Penny, in terms of like the commonalities that run across your clients. I mean, 8 million people around the United States who you work with. It's really runs the gamut, I know. But what's the commonality there?
The commonality is that our clients care about their health, their family, their purpose, like their reason for being on the planet, and how that manifests in their financial plan. So strangely enough, what our clients want to talk with our financial advisors before we get to which stock or bond is, I'm concerned about how long I'm going to live and planning for that. I'm also concerned about the next 2 generations of my family. And by the way, there's an $84 trillion wealth transfer that's in motion right now. And so family and how you pass on your legacy and your assets to your family. And then your purpose. Like, you know, what do I want to do in retirement? Is retirement going to be different for me than it was for my parents? It certainly is going to be different for my 30-year-olds than it will be for me. And so this is the common thread, the very real, multi-dimensional ways that our clients express themselves. And the other thing that's common is that we want to get to know them.
Penny,
Every single one of them is different.
I think about someone like you who, you know, are it's a very important seat in terms of a financial firm. And when you talk about generational wealth and that transfer, okay, that's great in terms of a CEO who runs a business that's based on people having money to invest or wanting to invest. That, you know, do you get more nervous about, I don't know, is it 2 generations from now that doesn't have, we talk about this all the time. I think about my dad, or maybe, you know, your dad, you know, pension, investments, Social Security, several things, you know, bought a house in cash outright 50 years ago. Like, it was a very different dynamic. And I have younger individuals in my life, nieces and nephews, and they're like, I'm never going to buy a house. I just can't do it. These are well-educated people who are making a decent living. But I mean, how do you guys think about what is the lifeblood of your business going forward? And I don't know, is it 2 or 3 generations that maybe it's a little bit different business?
Well, we've worked with 7 generations of clients in 102 years. And
that's backwards.
That's backwards, but I have no doubt that each generation looked to the future generations and said, how are they going to do it? It's getting more complicated. That's why it's so important to get good financial advice. We start with financial literacy. We're teaching 1 million learners in North America over these 5 years about the basics of saving and investing and budgeting and credit card debt. And then we invite those investors, we invite new...
Are they younger?
Absolutely, they're younger. They're in high school. And then we work with investors across the generations. We work with those who have money now and who are beginning the process of establishing wealth. It's not going to be easy, but it has always been the case. You know, the time value of money and compounding of interest is a magical thing.
Right.
People who understand that earlier in their lives and get on that train, that's what we help our clients do.
Yeah, I mean, unfortunately, they don't teach that in junior high.
No. Well, interestingly, you have
to learn it from your parents.
There are now 25 states that mandate financial literacy education in the high schools.
Really?
And we've been in 5,000 high schools. Yeah. We've taught 300,000 students just in the past 3 or 4 years.
I wonder if it's working.
What we have learned from those students is that their confidence is 53% higher, and they're over 60% more likely to start the process of investing. It's not magical to them at that point. It's become far less abstract, and it's become something that they could imagine would be part of their lives.
Do you think we'll need to get to a point, and forgive me, I know we're kind of getting existential a little bit, or bigger macro. We've got about 30, 40 seconds left here, but we get to a point where you're born in the government or something is put aside for people just because we don't have the retirement plans like that companies used to do in terms of pensions and so on and so forth. I understand 401k, but that's a little bit more active on an individual's part. Do we get to a point where there's government involvement? Just quickly.
I think that to solve this problem, there's a really important partnership that needs to happen between employers, between financial advisor and wealth management firms like ours, and public policy.
So appreciate it. I know we were going to talk a lot more Fed and stuff, but this was, I think, really smart because I just think about kind of what the future is in terms of the investment world. Thank you so much. With you. Really appreciate it. Penny Pennington, she's the Chief Executive Officer of Edward Jones. She sees a lot, so does her team, joining us here in our Bloomberg Interactive Broker Studio. All right, just got about 10 minutes left in the trading session, folks. We're down across the board, a busy day, down about 0.8% on the NASDAQ.
Tesla and Volkswagen, which have struggled to cope with faltering demand. BMW ADRs today lower by 3.5%. Tesla is in early discussions with Reliance Industries about a possible joint venture to build an EV manufacturing facility in India. This according to Hindu Business Line. We've got shares of Tesla trading lower today by 2.9%. The publication says Reliance's role has not been finalized, and senior Tesla officials are expected to visit India to finalize the plan's location. Apple assembled $14 billion of iPhones in India last fiscal year, doubling production in a sign that it is accelerating a push to diversify beyond China. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, sources tell Bloomberg the U.S. tech giant now makes as much as 14%, or about 1 in 7 of its marquee devices in India. And the ramp-up suggests Apple is accelerating efforts to cut its long-standing reliance on China as geopolitical tensions mount. China does remain Apple's largest iPhone-making hub, though, and biggest overseas market as well. That's also where Apple's revenues are plunging, hit by rivals such as Huawei Technologies and an expanding Chinese ban on the use of foreign technology in the workplace there. The big jump in Indian activity, meantime, marks a win for the administration of Prime Minister Narendra Modi, who has plied foreign firms, including Apple, with financial incentives to try to attract high-end manufacturing. Charlie?
And that's Denise Pellegrini reporting. Alpine Immune Sciences, it is a clinical stage biotech company developing a treatment for inflammatory kidney diseases, is said to be weighing options, including a potential sale after attracting takeover interest. This according to sources. Right now, Alpine Immune shares, they are surging by 21.5%. Stocks lower across the board, and those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Master. I'm Tim Stenevec. We're following reports from multiple outlets that police are responding to a shooting in a large crowd in Philadelphia. According to CNN, police do not believe there was an active shooter. We'll continue to update you as the story develops.
All right, continuing to keep an eye on that. Also keeping an eye on what's just popped up on our most read on the Bloomberg terminal. This has to do, once again, with Apple. We talked about Apple earlier with Mark Gurman of Bloomberg News, and he's got another story that just crossed. An Apple retail store in the upscale town of Short Hill, so about 30, 40 minutes outside New York City from where we are. In New Jersey, it has petitioned to unionize, marking the first such effort after a year-long lull.
Yeah, that store is located within a mall. It has 104 employees that would be part of the union if the effort does move forward. The staff, represented by the Communications Workers of America, CWA, filed its petition with the National Labor Relations Board on Monday.
Yeah, Tim, this marking the 5th U.S. Apple store where workers have petitioned to unionize, joining locations in Oklahoma City, the Maryland town of Towson, Atlanta, and St. Louis. So far, only the Towson and Oklahoma City sites have successfully unionized. So there has been some success, and we definitely see a little bit of a trend here.
Yeah, we should note that the member of the organizing committee for New Jersey said in a statement, quote, "We strongly believe forming a union is the best way to ensure all Apple workers receive respect, pay, and benefits, and working conditions that they deserve. Apple has responded to organizing by violating workers' rights at stores across the country. We hope Apple's executives will recognize their opportunity to stay on the cutting edge by taking a different approach." That's from a statement provided by the CWA from John Nagy, a member of the organizing committee.
Meantime, Apple has said that it was, quote, dedicated to providing an excellent experience for our customers and teams. We have always paid our retail teams in the top tier of the market, the company's saying, and we provide exceptional and comprehensive benefits for all full and part-time employees as part of the overall support that we provide to all our valued team members. Again, this is coming from Apple.
Oh, look, we talked with Joe Doe earlier about steelworkers and the power of the steelworkers union here in the U.S., potentially blocking a deal by Nippon Steel. In addition to that, Carol, we've seen a rise in labor over the past couple of years.
Absolutely.
With, unionizations at Starbucks and other stores as well.
After years of unions
it's
really
still a
waning
shadow of what they were in the 1980s and before.
Right, in terms of membership and clout. What's interesting about the Steel story, though, it's their clout in what are very important political swing states, if you will, for the upcoming November election. All right, don't go anywhere. We're going to head over to our TV colleagues. That's because we're talking about the markets. Beyond the Bell starts right now.
the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast. Scarlet Fu joining us in Studio 2. Carol Masser and Tim Stenovic bringing up the rear. Welcome to our audiences across all of our Bloomberg platforms. You know, we've had a lot of mad days, Carol, over the last few days and weeks, but today really broke that streak.
Yeah, absolutely. Really interesting day, right? And I feel like, of course, it all kicked off this morning with the inflation print that did come in hotter than forecast. And then, of course, you got the Fed minutes. But it's interesting to see kind of the movement we've seen kind of bouncing around on the equity side of things. But if you look at the Treasury curve, very clear message about higher for longer and higher rates, everybody.
Yeah, it's pretty remarkable to see that, you know, just back in December, folks were talking about potentially 6 rate cuts this year. Now, Scarlett, I think many will be surprised if we see 3 rate cuts this year. 2 is potentially what's going to happen. You have folks like Torsten Slok coming out with a note this morning saying we're sticking to our view that the Fed will not cut rates in 2024.
And there are some people who also... There are also some people who say that maybe the Fed needs to consider talking about raising rates, maybe not out loud, but that also kind of is always a prospect. It really sets up the day in an interesting way for tomorrow's wholesale inflation number as well. Is that going to move the needle?
Well, yeah, I don't know. I mean, I would say maybe, but then economists always say, don't know, PPI never moves the needle. But I just want to, just to your rate cut point there, Scarlett, because, I mean, you go through WIRP and you look at what the swaps market is pricing in. We're now basically priced in for 2 rate cuts this year. That's what the market is expecting. But more importantly, you don't have any real consensus as to when that really kicks off. I mean, everyone's now looking to September, but that's not even a slam dunk.
Does it really matter when, or does it matter how many? No one's taking out a cut for the whole cutting cycle. It's just a matter of pushing it back.
I think it matters because, I mean, you get to this, I mean, if you believe this idea that the Fed doesn't want to get in the way of an election cycle, and if they're not going to start until September, then how much wiggle room does that give them? Do they just do a 50 in September and start, or did they just be brave enough and just say, we're just ignoring the election, we're going to do whatever we need?
Hey, the market's closed.
The market is closed here, Carol Masser, and so let's walk through the numbers.
We were really engaged in that
here.
conversation.
The Dow Jones Industrial Average is going to close down on the day, off the lows of the day, but still down 1%, 422 points lower than where it was yesterday. The S&P 500 down 49 points, or about 1%. The NASDAQ Composite down about 0.8%. But the biggest decliners out there were in your cyclical space. Dow Transport's down 2%. S&P 400 Midcaps down 2%, and the Russell 2000 closing out the day down 2.5.
All right, we're going to get to the sector performance in just a moment, but just again, staying kind of macro on the S&P 500. Big picture, 431 names in the index, Scarlett, to the downside, 72 to the upside.
Yeah, and looking at the IMAP, lots and lots of red. You have 11 sectors, only 1 finished in the green, and that's barely. Energy up by 0.3%, thanks to rising oil prices. WTI surpassing $86 a barrel. In terms of the leading underperformers, real estate investment trust losing more than 4%. Utilities, another interest rate sensitive group, down 1.75%, and materials off by 1.5%.
All right, guys, let me get to some of the individual gainers. Number 1 gainer in the NASDAQ 100 was NVIDIA, also a top performer in the S&P 500. NVIDIA, this is coming from Morgan Stanley, saying it's the best way to get exposure to artificial intelligence as visibility into strong spending continues to build. Again, Morgan Stanley saying this in a note. They reiterated their overweight rating on NVIDIA while raising its price target to $1,000 a share from $795 a share. NVIDIA finishing the day just shy of a 2% gain, closing at $870 and change. All right, let's go to GE, if we may. That stock up about 1.4% in today's session. This, again, was a top performer in the S&P 500, at least earlier in the day. Company we know created following the spinoff last week of GE and the spinoff of GE Vernova, which is the renewables business. So GE, again, up 1.4%. Didn't really find any specific news, but yesterday, GE Aerospace, which is now the GE ticker, upgraded to buy from holdover at Cowen, highlighting the company's position as a market leader in commercial jet engine technology and its extended aftermarket visibility. They raised the price target to $180 from $175. The stock, by the way, ticker GE, is up about 54% so far this year. And while on the subject of GE, or formerly, or, you know, it's now kind of all its new iterations, if you will, GE Vernova, ticker GEV, that stock was up about 4.7%, a top gainer, I think the number 1 gainer in the S&P 500. Again, no real news on it, but just interesting to see once again that in a market where there was some stress maybe today and risk off, that's where we saw investors putting some effort.
All right, well, let's talk about some of the notable decliners. In the S&P 500, among the worst performers were major U.S. tech and internet stocks. We saw shares of Apple fall 1.1%, Tesla down 2.9% today. Shares of Microsoft falling today by 0.7%. This all happening after that latest CPI data came in hotter than expected, suggesting that the Fed is going to delay interest rate cuts until later this year. Do you want to talk about Deckers Outdoor, the worst performer on a percentage basis in the S&P 500? Apparently, people aren't buying those Hokas like they used to. Truist came out. They have the credit card data, and they said that it signals direct-to-consumer growth of the Hoka sneaker brand slowed in the middle of February and remains softer through March. Shares down more than 6% on the day today. Should note that Deckers Outdoor also owns UGG, Teva, Sanuk, and more.
And apparently, UGG demand for UGGs is still pretty solid. So.
They're classic. What can I say?
Yeah, good for those teenage
girls. It's a staple in the closet. I'm just going to say that.
Certainly in the Northeast.
Big in California, too, for those surfers. Delta Airlines, ticker DAL, reported earnings earlier today. And it was interesting because earnings surpassed expectations. The stock moved as high as 4% to the upside in the trade. But then a little later in the day, it started moving lower, ended up closing down by 2.3%. This after the inflation data came out, showed that airfares dropped more than 7% in March from the previous year. It was the biggest increase, or the biggest decrease rather, since November. Separately, we saw oil move higher. Jet fuel, of course, one of the airline industry's biggest expenses.
All right, let's take a look at the bond market, because that's where a lot of the action really emanated from, guys. You had the sell-off, a pretty broad base, but really in the front end in particular, you saw a move of about 22 basis points. That was the biggest move we've seen on the day since the SVB crisis about a year ago. The 10-year yield saw the biggest move, about 18 basis points. We haven't seen that since September of 2022. So lots of really big superlatives, guys, as sort of like the big moves, the chunky moves in the bond market. We're like kissing 5% now on the 2-year SCAR.
Yeah, some mammoth moves in the bond market there. There are still some earnings crossing the wire. Let's talk about Rent the Runway, which of course had a reverse stock split just earlier this month. Fourth quarter revenue, or its fiscal fourth quarter revenue, I should say, $75.8 million, slightly higher than what analysts were looking for, which was $74.5 million. Adjusted EBITDA of $11.2 million, it almost double what analysts were looking for. As for the outlook for this quarter, Rent the Runway sees $73 to $75 million. That is shy of what analysts were looking for, which was $75.9 million. And revenue growth of between 1% to 6% for fiscal year 2024. They got to convince people to shell out anywhere from $90 to $200 a month to keep those fashion subscriptions going.
Yeah, it's interesting too. And I'm just looking at the stock in the aftermarket, up about 9.5%. It was down about 30% year to date here. So it's been under a lot of pressure. And you've got about 20% of the float being shorted. So anybody who was maybe counting on it not being so great, maybe doing a little bit of short covering right now.
The company coming out and saying that customers have been buying more inventory, customer retention has markedly improved year over year, and that the premium personal concierge service to style customers made it easier for customers to discover inventory that they love and created more aspirational product experience.
All right, guys, next time you go to order your latte at Starbucks, you're going to have to whisper, because apparently they are creating designs within some of their stores basically to curb noise. They want to make order taking or order giving, if you will, easier, because apparently some of the orders are coming out wrong, and I guess people are taking the orders and so on and so forth. The baristas, they're not hearing it clearly, and that actually costs them money.
Well, also what's interesting on this one, too, is maybe if their drinks weren't so complicated, it wouldn't be a problem.
Half double decaf with a double mocha twist?
I can never order
correctly. Right, so like if you didn't have to order for 20 minutes, maybe you could hear them better.
Or maybe they should call a small, and a medium, a medium.
Yeah, totally agree with that.
Is this
100%.
Seinfeld?
Yes.
Is this Seinfeld? Are we watching Seinfeld?
I was surprised to see this given the growth of online and mobile ordering, that people still ordered using their voices. I thought it was all just done over the phone.
I actually find the story fascinating, too. I mean, there was a story just a couple of days ago about how another food chain, Polo Campero, had actually tried to find ways to sort of make its ordering process more efficient.
Yeah, got to decrease those steps,
reducing the
right?
amount of steps that folks had to take, people working there had to take, and in theory, you get your order faster. So, look, I guess you experiment with what you can. I haven't been in a Starbucks in a while, but if it was that loud and they couldn't get the order right, then, maybe it works.
Romain sends his team to get his Starbucks. That's how he is.
I would think they want to keep it loud. I would think they want to keep it loud to prevent people from sort of camping out with their laptops in there. and just like taking up all the seats for the whole day?
They do that anyway. Noise canceling headphones.
Oh yeah, okay.
How do I get a team? How do we get a team?
You got a team.
We are
We
the
do
team.
have a great
We
team,
do.
actually. We do have a great team. All right, guys, that is a wrap. Our cross-platform coverage on this Wednesday, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I don't know if you saw this, Carol, but it seems like everybody's coming out with new chips these days.
I agree.
So Meta Platforms today
It's like there's
announced-
an AI race or new AI races on or something.
So Meta announced this new homegrown chip. What it's going to do is to help power its AI services. The idea here is that it aims to decrease its reliance on semis from NVIDIA and other outside companies. And you know what? It comes just a day after Intel essentially did the same thing. They rolled out a new version of their AI chip, also aiming to challenge NVIDIA in one of the fastest growing parts of the semiconductor industry.
All right, needless to say, AI and the chips that power AI, they are so hot right now.
Is that a Zoolander reference? I think she just did a Zoolander reference.
Maybe.
Chips, so hot right now.
All right, one of our go-tos on chips is Dan Morgan. He's Senior Portfolio Manager at Synovus Trust Company, joining us right now from Atlanta. You actually write about the top players in the red-hot AI chip market. It does feel like there's a lot going on, Dan Morgan. What are you paying attention to, whether it's Meta, whether it's Intel, or what NVIDIA is up to?
Well, it's interesting, Carol, because, we kind of started off this conversation with who are the top traditional chip makers who are coming out with AI, AI products to compete against NVIDIA. So we had conversations about, let's say, AMD or Broadcom or Marvel, and to a certain extent, Qualcomm on the handset. And now that everything's kind of turned around, Tim and Carol, where we have the end user buyer of the chip is actually producing their own chips. Like you mentioned, the recent announcements that came out over the last couple of days. I mean, you've got Alphabet with the Axion chip. Oh, I'm sorry. Go ahead, Tim.
I just wanted to, is it that easy that Meta can just create a chip that competes with NVIDIA?
Well, it's kind of interesting. Meta's chip, the MTIA is what it's abbreviated as, which is Meta Training Inference Accelerator version 1, which is kind of a long name. But to say, Tim, that chip could go head-to-head against, let's say, a Blackwell 100, which is the new NVIDIA chip that came out a couple of weeks ago. I'm sure you guys covered that.
Oh, yeah.
Probably not be an accurate statement. But for the purpose of Meta in regards to what they're trying to do, obviously, which is trying to post advertising when you're doing your social media searches and so forth in the right places to increase ROI, it might work very well for them. So it is interesting, though, Tim, that we're getting all these companies that are the end users who are now producing their own proprietary chips.
So is that a no? That it's not like NVIDIA's
Yeah, I mean,
the lecture.
it wouldn't hold a candle to
So
Blackwell.
well, here's the deal, right?
Yeah.
Not all chips are the same. We know that. We've talked to you. We talked to our Ian King. I'm assuming that different companies are putting out things to make accelerator chips, to make the NVIDIA, to make the AI applications happen more efficiently, use less energy, and so on and so forth. So how are you looking at the AI chip space? Like, what's important? What does our audience kind of need to know here as all this news continues to come at them?
We bring up a good point, Carol, and that is that up to this point, most of the action has been in data center, right? And Tim and Carol, we have covered NVIDIA for many, many years and talked about their, trajectory through that space. And now you have other companies who are trying to focus on the data center, right? AMD, Intel, trying to come out with chips to go against NVIDIA. And then you have the top players in that space, which would be Amazon with AWS. They just came out with a couple of new chips, the Graviton 4, the Trainium 2. Then we also have, believe it or not, Microsoft, which is the head of operating systems, has come out with their own chips also in that space for Acer. So it's interesting, Carol, because you have the proprietary companies developing chips specific to, for example, Amazon for AWS, and you have, let's say, Microsoft with Acer, but they are still focused in the data center. And that still seems to be the hot spot in terms of profits and so forth, and where a lot of the action is right now. Not to take away from, for example, what Meta or maybe Alphabet is doing,
But so far, the hot spot for investors has been definitely in the data center.
Hey, Dan, what would you say to someone? I want to switch gears a little bit and talk about investment opportunities because you watch the space really closely. What would you say to somebody who said, oh, you know what? I missed out on NVIDIA's 240% run-up last year. I missed out on some of the 75% increase this year. Meta Platforms, 200% increase last year, or Meta Platforms, close to 50% increase so far this year. And they're thinking to themselves, wait a second, I feel like a lot of the gains to be had with AI have already been had. What would you say to that?
I would say, Tim, we're still in the beginning stages. I mean, you could add Broadcom to that list of huge winners, right, in terms of investment over the last year. But I think that it's, some people have said it's overhyped. It's kind of like what happened back in the summer of 2000. And I would totally disagree just because these companies are all very profitable. They have very solid products. I still think there's a huge amount of upward potential, in a lot of these names that we're talking about today. I mean, the projected growth rate for artificial intelligence chips is about 25% going out. So definitely one of the fastest growing groups. And I still think we're in the beginning stages, Tim and Carol. And I know that sounds a little crazy after these huge run-ups, but this is where the action is right now in tech. And I still believe it to continue to go.
Can I ask you, I mean, there are chips in everything, right? How many times have we said this? If we all had a buck for every time we said that, we would all be living on our private islands.
You could almost afford some
NVIDIA chips or stock, right, exactly. No, but having said that, there are chips in everything. So not all chips are alike. How much of our world currently today is an AI-related chip of some sort? How much will be?
Well, it's interesting, Carol, because, we've talked before about Micron technology being more of a commodity-based chip maker with DRAM and NAND, and then we swing the pendulum over to AI, right, as being like NVIDIA as being like, wow, they charge $20,000 to $30,000 a chip, or even a high-level Micron high-bandwidth memory chip would probably be $1,000 to $1,500. Just give you a difference in the pricing. So, I wouldn't say at this point, Carol, that everything has an AI chip in it. It's mostly, like we mentioned, the data center, but it is moving to other applications. But again, it's a sector that is still in its infancy stages in terms of, like you just mentioned, is it going to end up that we have an AI chip in our washing machines that we do our laundry in? I wouldn't be surprised if we don't, and we're getting there.
I can't even connect my washing machine to the internet.
But that's your point. Like, is there a way that I don't know. Do you anticipate someone who understands this industry that there will be an AI chip in everything? Is that where we're going?
Yeah, I don't know if you could say, but pretty close, especially in terms of the, you look at the driverless vehicles. That's a huge AI option, opening for them. You look at mobile phones. I mean, Apple hasn't done that much in that space. We have Qualcomm has a chip that they have introduced in terms of the AI 100, but that's a huge open frontier, right? Getting away from the data center, getting away from cloud. So there are a lot of opportunities in other spaces, and maybe you're right, Carol, we'll get to the point where everything has an AI chip in it. We're not there yet, and that's what creates the growth.
I wasn't actually joking about not being able to connect my washing machine to the internet.
Don't you think that's crazy? I have a toothbrush that I can do, connect to an app. I'm like, I just need to brush my teeth.
No, our washing machine is supposed to connect to the internet. It just won't work.
But why do you want that? So that you can
No, I was trying to I downloaded the app. It won't connect.
There's the data on, all right, the Stenovic household when they're doing their laundery, what kind of suds they use?
I have no idea. Hey, Dan, before we let you go,
I don't get it.
Give me some, give our investing audience some picks for the remainder of the year in terms of stocks you like.
Do you have a favorite name in this space?
Well, I mean, tech, it's hard not to like, an NVIDIA. I mean, these are names that are currently on our buy list. Broadcom is another AI play. Qualcomm is interesting. Just as I mentioned before, as a play on the actual CDMA-based phones, of course, Android-based opposed to Apple. So those would be some names in the space, that are currently on our buy list, that if, the client's risk tolerance and objectives are in line, that would be something that we look at in terms of AI. So those, again, are names that aren't uncommon. I'm sure a lot of people have already looked at those, but, there's not that many ways to play it right now. And those are probably the top plays.
Hey, 20 seconds. Are you buying Microsoft, Alphabet, or Meta because of its chips? Real quickly.
Microsoft, looks really good coming into this upcoming report in about
Yeah.
2 weeks, Carol, and so does Meta in terms of
Okay.
ability to blow numbers. So even beyond the Gen AI focus,
it.
which we'll hear about on the conference call, I think there's other things that are working really strong for those companies. Yeah.
Dan Morgan, great report. Great to chat with you. Dan Morgan of Synovus. Thanks.
Hey, it's 421 on Wall Street. We do check markets all day long here at Bloomberg. Vertex Pharmaceuticals is acquiring Alpine Immune Sciences for $65 a share, or about $4.9 billion in cash. This transaction has unanimously been approved by both the Vertex and Alpine boards. It is anticipated to close later this quarter. Now, in the regular session today, we did see Alpine shares surge by 21%. We got a trading halt right now on Alpine. Vertex, after hours, trading lower by about 6.9%. A down day, the Dow, the S&P, NASDAQ all declined today, with traders sending stocks and bonds sliding after another hot inflation report signaled the Fed will be in no rush to cut rates this year. Oil climbed as geopolitical jitters resurfaced. S&P now at 5160, lower today by 49 points, down by about 1%. The Dow also lower by 1% today, down 422 points, and West West Texas and the NASDAQ Composite Index down 136, a drop there of 0.8%. 10-year 4.54%, the 2-year 4.96%. Spot gold down $19 the ounce to $23.32, a decline of 0.9%. West Texas Intermediate crude up 1.2%, 86.27 for a barrel of WTI. So again, recapping CPI Wednesday, stocks sold off big time. S&P down 49 to 51.60, a drop today of 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Appel. I do appreciate it. Hey, for a few years before the pandemic, it looked at least to a lot of people that Chinese tech companies were pretty much unstoppable. You remember this, Carol, right?
I certainly do.
Okay, so back in 2017, for example, Tencent shot past what was then Facebook to become the 5th largest publicly held company. In 2020, China was second to the U.S. in terms of the number of unicorns, those, private companies worth $1 billion. Of the world's top 10 unicorns in 2020, 6 of them came from China. 4 Chinese companies topped the chart. All of this that I just read coming from the introduction to the new book, Highwire, How China Regulates Big Tech and Governs Its Economy, the book by Angela Zhang, a professor of law at the University of Hong Kong. Professor Zhang joins us now from Washington, D.C. Professor, good to have you with us this afternoon. How are you?
I'm doing great. Hi, Carol and Tim.
Hi.
Hi. This is a great topic because we talk about it a lot and just about investing in China and whether or not it is indeed investable right now. But I want to back up a little bit. How did we get to the point where Chinese tech companies, both public and private, seemed unstoppable? And then suddenly, in the midst of the pandemic, there was this crackdown. What happened?
Well, I see the watershed moment was Ant Group's IPO suspension, and a couple of weeks before, a couple of weeks before the suspension, Jack Ma made this highly controversial speech in the financial summit in Shanghai, as you may recall, and that really spooked the financial regulators, who eventually, waged a regulatory war against Ant, and which caused the collapse of its IPO and also marked the beginning of an unprecedented crackdown that spread like wildfire, affecting every sector of China's internet industry.
Can you talk about competing forces for motivations here? Because it would seem to be in the best interest of leadership of a country to have a thriving tech sector and to have a thriving economy here. What happened?
Well, of course, right. For a really long time, that was the main policy agenda of the Chinese Communist Party, and they introduced this Internet Plus initiative and have been very supportive of the development of the consumer tech businesses. And back then, we have this very vibrant entrepreneurial environment. But what happened is that starting in 2020, when Ant was preparing for IPO, this firm trying to identify itself not as a fintech business, but rather as a tech firm. So it even changed its name from Ant Financial to Ant Group to avoid being identified as a financial institution so that it can gain a much higher valuation. And in fact, 4 times as much valuation as we have got. It would have gotten as a financial institution. And that really worries China's financial regulator, particularly the People's Bank of China, the PBOC. And particularly, Ant got a really, really high valuation in the end. It was $320 billion US dollars, and that's even higher than JP Morgan, the then largest bank at that time. So that really worried the regulator.
Professor Zhang, one thing I wonder is how, your book is about how China regulates big technology. And I do wonder, in a time where I look at U.S.-China relations are very strained, especially when it comes to, it feels like, technology and company know-how between the two nations. Having said that, what you are seeing in terms of the regulatory environment for China, or what China has for its big tech companies, will that ultimately hold them back and stymie them? And maybe I don't know, does the U.S. not have to be so concerned about where China is going, especially when it comes to high tech?
you're right. I mean, in the aftermath of the crackdown, we see that the tech sector has suffered a lot. Right? I mean, they lost over $1 trillion of market cap during the crackdown, and a lot of these tech firms are laying off, conducting massive layoffs, and they would not be as competitive as they would have been would it not be a massive crackdown. However, I mean, I still think that these companies are fiercely competitive. As you can see, Biden was able to foster, a really successful company like TikTok, right? I mean, in the first place. So I still think that these are, serious rivals to U.S. Consumer tech businesses. But you are definitely right that what the government did had undermined its power.
Well, it's interesting too. On a day where we talked to our Mark Gurman about how was it 1 in 7 iPhones, the lower end iPhones are now being made in India, and how Apple is diversifying, where it's making items. And I understand that China wants to be playing, certainly from a technology bent, on a higher level, if you will, right? They don't want to be the manufacturer to the world. But as they start to see some of those coveted global technology companies maybe look to diversify, does that have China concerned? Should they be concerned? And is it a result of all the policy?
Well, I think that diversification has less to do with the domestic regulatory policy, but more to do with the deteriorated geopolitical environment. And so, but at the same time, the very intense regulatory crackdown wasn't helping Chinese tech firms and hurt their competitiveness. But U.S. firms do what they need to do to diversify their portfolio, and especially if not just U.S. large tech businesses, but also U.S. investors who used to be the major investors in the Chinese consumer tech businesses, and now they are retreating from the Chinese tech sectors, partly also because they really don't like the regulatory regime. They think that it's too arbitrary.
Okay, so I want to you mentioned ByteDance TikTok. I do want to get your prediction for what's going to happen here in the U.S. when it comes to the fate of TikTok. It's certainly not the focus of your book, but it's definitely something that I'm interested in your opinion on. I mean, what do you think happens here?
Well, I think the book is still relevant to the TikTok story because TikTok is owned by ByteDance, a Chinese company, despite the fact that TikTok says we are not a Chinese company, but it has this Chinese link, right? I mean, so how China regulates ByteDance will have implications for TikTok's businesses, just like when the U.S. introduced this bill says, TikTok, you can either divest yourself or, disappear from the U.S. market. And the China says, well, we may not want you to sell, said to the ByteDance, we may not want you to sell your critical technology to U.S. buyers, right? I mean, that was back in 2020 when the Trump administration wanted TikTok to divest itself to Oracle or sell it to other businesses, right? I mean, China introduces export restrictions that will potentially block such sales. Now, that being said, I don't think the Chinese government is hurting TikTok's position here. The fact that Chinese government has this law and it will be very likely to say, we are blocking the sales, then will strengthen TikTok's argument that this is effectively a ban, right? I mean, so when this case, even if the Senate eventually approved this law, I mean, even if this become law, this could be challenged in court, and court is highly unlikely. I mean, I think court is very unlikely to rule in favor of a law that work effectively as a ban, because that violates the freedom of speech of affecting too many U.S. citizens. So actually, I think the Chinese actually helps TikTok's position if you look at it from this perspective.
One thing I want to do, we just have about 45 seconds left here. Just quickly, Professor Zhang, President Xi is all about common prosperity, and that's how he justifies some of the regulatory crackdown, if you will, and oversight of big technology. Will it lead to a more prosperous or widespread prosperous economy for China, or not necessarily? And again, sorry, just about 30 seconds here.
Well, the Common Prosperity Initiative was well-intentioned. However, I mean, the way it has been implemented had led to unintended consequences. I mean, the tech crackdown is one excellent example. It was supposed to empower all the platform participants, like users, buyers, merchants, to better negotiate with the platform. However, it didn't really achieve this goal. It hasn't really changed the competitive dynamics or enhanced consumer welfare.
Really, really interesting.
Yeah.
Hey,
macro think.
check out the book. It's called High Wire, How China Regulates Big Tech and Governs Its Economy. Angela Zhang, a professor of law at the University of Hong Kong, joining us just now. Professor Zhang, thank you so much. Really appreciate it.
All right, folks, let's get a check on world and national news. A lot going on this Wednesday. Back to Amy Morse we go. She's in D.C. Hey, Amy.
Hey, Carol. President Biden, and Japanese Prime Minister Fumio Kishida have both agreed to start a new joint air defense strategy. This would be with Australia to counter China's aggressive military threats in the Pacific.
For the first time, Japan and the United States and Australia will create a network system of air, missile, and defense architecture. We're also looking forward to standing up a trilateral military exercise with Japan and the United Kingdom.
The leaders met for a state visit at the White House today. President Biden describing the relationship with Japan as a monumental alliance between our two great democracies. The U.S. and its allies believe major missile or drone strikes by Iran or its proxies against military and government targets in Israel may be imminent. They say this assault could happen in just the next few days. Iran has threatened to hit Israel in retaliation for an attack on a diplomatic compound last week in Syria. Federal investigators looking into what caused a ship to crash into a vital Baltimore bridge last month are now honing in on the vessel's electrical system. National Transportation Safety Board Chair Jennifer Homedy says that's not all.
In addition to that, our Office of Highway Safety team is really focused on pier protection, looking at the original bridge design and how it would be built today under today's standards.
Now, just before the ship crashed into the Key Bridge in March, it was unable to maintain its desired heading. It experienced a loss of propulsion. They just don't know why yet. Speaker Mike Johnson says an effort to oust him as Speaker would cause chaos in the House. He defended his leadership strategy today ahead of a meeting with Georgia Republican Marjorie Taylor Greene, who introduced a motion to vacate the Speaker's chair before the House broke for a 2-week recess last month. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
All right, everybody, coming up, we're going to get into an interesting story, another exclusive here at Bloomberg. Has to do what's going on, I should say, with SpaceX and Tesla. We're going to get into that and valuations. That's coming up next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. CPI Wednesday. S&P 500 hit by a Fed pivot rethink along with war jitters. S&P today down 49 to 5160, a drop of 1%. Dow Industrials down 1.1%, lower by 422 points. The Nasdaq Composite Index down 136 for Nasdaq, a drop today of 0.8%. Russell 2000 was down 2.5% today. 10-year 4.54%. The 2-year 4.96% on the 2-year. Spot gold now down $20 the ounce to $23.32. That is a drop of 0.9%. While West Texas Intermediate crude back above $86, $86.20 a barrel, up by 1.1%. Traders sent stocks and bonds sliding after another hot inflation report. Francis Donald is global chief economist at Manulife Investment Management.
We still have concerns that even though inflation is coming in sticky, growth is going to decline in the second half of the year. So what worries me is this word stagflationary is probably going to come back a lot more in our narrative in the next 3 to 6 months. That's a very difficult place for the Federal Reserve to be. They're going to have to pick their favorite child, Sophie's choice. Is it inflation or is it growth? And I think it's a really difficult environment for risk assets. They're going to have to deal with the worst of both worlds.
Francis Donald of Manulife Investment. An Apple retail store in Short Hills, New Jersey, has petitioned to unionize, marking the first such effort after a year-long lull. Apple shares today declined by 1.1%. Worth noting that year-to-date, Apple shares are down 12.9%. Again, recapping, stocks lower, S&P today down 49, a drop of 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. That's Carol Masser. I'm Tim Stanovec. And this one is one of the most read stories on the Bloomberg terminal. It's another Bloomberg exclusive.
That's because you put Elon Musk or something in a headline. You know we're going to read it.
It's not just because of that.
No, it's not.
Because it's got some exclusive info, some financials in here about how SpaceX's prized Starlink satellite business is still burning through more cash than it brings in. People familiar with the finances of one of the world's most valuable private companies say that Starlink has at times actually lost hundreds of dollars on each of the millions of ground terminals it ships, casting doubt on claims by CEO Elon Musk that the company's top brass that the business is, quote, in a profitable territory.
All right, Kyle Porter is Bloomberg News North American Industrials and Transport reporter and writes about Musk's undisclosed Starlink costs and how it's undercutting his profitability claims. So kind of laying it out for us. Kyle joining us from Washington, D.C. Great story, Bloomberg exclusive, so kudos. Lay it all out for us. What's going on, or what do we know?
Yeah, the reporting of this story, several sources said to us that the accounting for Starlink is a little bit more art than science. That's not to say that it's not bringing in a lot of revenue. It is. But in terms of profitability, it's a little bit smoke and mirrors. It's profitable sometimes without launch costs being put in. It's profitable on occasions on like a very narrow basis. It might have had a good quarter and then it fell away. You can definitely cast similarities back to the early days of Tesla, if you want a comparison to that.
Okay, so hey, take a big step back and remind us about the importance of Starlink to SpaceX's business. I mean, SpaceX's business is not just sending rockets up into the sky and being a launch partner for some of the biggest companies and governments out there. Talk to us about where Starlink fits in.
Well, it's the growth engine. There's, as I think Gwen Shotwell said on numerous occasions, that there's maybe 150 customers globally in 10 years for the launch business. You know, there's 7 billion potentially for Starlink, and that's across, consumer and commercial applications. If they're going to turn this into the cash cow that they hope it to be, it's going to rest on Starlink.
What do we know, though, about growth rates, right? Because you're right. You know, sometimes, right, a company grows and grows and grows. It's not making money or it's burning through cash, and then eventually it becomes pretty profitable. What do we know about that?
They certainly are making steps to do that, and for our understanding is they've moved in the right direction. They've done a lot of work on taking the cost out of building the terminals. There's a lot more work that's now being done in-house. They built up the manufacturing capacity. They are slowly getting more traction with corporate clients, and the corporate clients they've got absolutely love them, but they don't have a comparable sales force to a Viasat, for example. They're not really holistic. We're told there's dozens of people working on the commercial contract side of things compared to hundreds at their competitors.
Well, how important is that business for them versus the business of just selling a terminal to somebody who may, I don't know, spend the summers on a boat and need Wi-Fi? Carol Masser.
Oh. Full disclosure, we that's what we do, and we actually have one because that's how you get internet service near the water.
If you think about how difficult it is to pull customers who, have a boat on the water or live in the edge of Montana versus what you can get if you get an airline to take your business, it's, the difference between hundreds of dollars a year versus tens of thousands of dollars a year. So you really need to ramp up that corporate exposure if you're going to have, a successful business quickly.
You know what's interesting about this, right? Okay, so it's not a public business, publicly held, right? Yet. And so what are the responsibilities of Elon Musk, who's not bashful about either putting something, making a post, or making some comments about something that potentially could be something spun off at some point? Like, what does he need to be saying, if anything, about the business and breaking it out?
I mean, it's surprising that he says as much as he does, given there's a queue of people going around the block wanting to invest in the business. I mean, every funding round has been as vague as the last, and yet, you were talking about $180 billion valuation before Christmas. People,
it's a lot.
Certainly people on that side of things that we've spoken to, they don't really seem to care because the numbers are going up.
Okay, so talk about this idea of spinning off Starlink, because this is something that our team has reported on quite a bit over the last couple of years, that this could be a separate publicly traded business. And I think that's an important part of the story is that, well, okay, what would investor appetite be for a business that isn't actually necessarily as profitable as many people thought?
Mm-hmm. I mean, you'd have so many hoops to jump through before you got to that. It was described to us as it's almost impossible to do that this year.
Really?
If you're going to separate this thing out and want to take it public, what you typically tend to have is, a vast IR team. You'll start going through with your investors who are likely to roll over into a publicly traded vehicle, quarterly information, breaking down, costs that they have on launch. How are those passed back and forth? Who pays for these things? To our knowledge, none of that really exists. They are doing early prep work to separate the businesses. Our understanding, the data is being moved. People are being moved into different buildings. Contracts are being put out. Like, you're at the early stage of legal entities being formed. You don't want to move it off too much because then, even while it's private, if you need more money, you'd have to fundraise. And then you're getting into questions like, well, how much of my SpaceX is really Starlink, and what should the value of my shares be if I'm going to separate these out into too much? And while the easy money's coming in and you're still growing it, do you really need to do that now? If you can get money privately without people asking too many questions, why do you want SEC regulation?
Yeah, no, it's a really good point. One last question, though. I'm just thinking about the build-out, the deployment of satellites, right? This is where they are. Starlink is in the spend mode, right? They've got to get those satellites up, especially if they want to get the big corporate customers. They need the coverage, if you will. At some point, that spend should be over, and then they get to really monetize all of that. Is that kind of the thinking or the business model here?
It is, although you've got to bear in mind that a Starlink satellite doesn't exist up in the atmosphere as long as some of its competitors. It's typically like a 7-year. Okay. So I'd have to double check that figure before you need to start pushing new ones back up. The actual reliability of the network also depends on having far more satellites in orbit. You really need to think about coverage as turning the tub on. As it rises, you get better coverage all around. It's not this case of one falling out means that you lose coverage in the southwest of the U.S.
Kyle, 20 seconds. What happens when the satellite kind of, quote unquote, expires?
Tim's worried.
You get a general incremental fall in the reliability of the product.
No, he's worried about the satellite coming to Earth.
Yeah, does it like
oh, God, no, they burn up on entry. Don't worry about it. Yeah.
Okay, all right, burns up on entry. Okay, just making sure.
Didn't we all know that?
No, don't have to be. Space junk's a real issue, Carol.
I know I know. There's a lot of stuff floating around.
Yeah,
I've seen Star Wars.
It's not
just
space
kidding.
junk.
Kyle Porter, love you. Bloomberg News, North American Industrials and Transport reporter. His story, a Bloomberg exclusive. Check it out at Bloomberg.com. It's also on the Bloomberg terminal. Tim, you're okay. The sky's not falling in yet.
Yeah, not yet.
This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Vertex Pharmaceuticals is acquiring Alpine Immune Sciences for $65 a share, or about $4.9 billion in cash. Both companies say the transaction has unanimously been approved by the boards of both Vertex and Alpine. Now, we're keeping an eye on Alpine shares after hours, surging now by 64%. During the regular session, Alpine was up 20.8%. An Apple retail store in the town of Short Hills, New Jersey, has petitioned to unionize, marking the first such effort after a year-long lull. The store has 104 employees. Apple, meanwhile, assembled $14 billion of iPhones in India last fiscal year, doubling production, in a sign it is accelerating a push to diversify beyond China. Sources tell Bloomberg the tech giant now makes as much as 14% of its marquee devices in India. So far this year, Apple shares down more than 12%. So what about the broader Apple outlook ahead of earnings next month? Andrew Murphy is managing partner at Deepwater Asset Management.
We're generally see more risk than reward in Apple's upcoming March quarter. China is a risk. The other thing is antitrust lawsuits, the DOJ. We think that's more noise, more bark than bite. But China is a serious risk overhanging the stock.
Apple reports earnings on May 2nd. Tesla is in early discussions with Reliance Industries about a possible joint venture to build an electric vehicle manufacturing facility in India. This according to Hindu Business Line. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, Tim and I getting ready to wrap up the Wednesday edition of Bloomberg Business Week. In the studio, we're kicking it with Chris. We're talking to Bloomberg Daybreak Asia anchor, Doug Christer. Co-host. Oh, sorry.
Yeah, we got a guy in Hong Kong I shared the show with.
We did not mean anything.
Yeah, I know. I just have to say that because he's an important part of the program.
Listen, you guys have an incredible team, and the two of you together, your coverage is a must listen. Man, you get into a cab at night or a car at night, and they're all listening to you. Just telling you.
That's pretty cool.
It is pretty cool.
Yeah.
You're a star.
No, I'm
not.
We're a good team, though. I think we've got some good people. And let me also say hi to Ed Baxter in San Francisco, who's the news guy.
Good team.
So we got it covered.
It's fun.
Anyway, what were you guys talking about today?
Well, of course, we talked about the inflation print. We talked about the Fed
hot,
minutes.
Huh?
Yeah. Hot, yeah.
Did you? Well, and the market reaction, I think, speaks for itself. So,
but not surprising, considering.
Well, you know,
I don't think so.
Powell, kind of put the thin end of the wedge into this last November, right? December, that period when he was aggressively kind of leading the market into expecting that they were going to see a lot more.
They put out a dot plot that said 3.
They did.
And
75, and the market
went
okay.
Double.
So now we have to unwind that. So what is the market now indicating? Maybe two?
Yeah.
And Torsten Slok from Apollo saying, maybe we don't get any.
He's been saying that for 6 weeks.
Right.
Yeah.
So we've been hearing much more of that. But look at the dollar.
Yeah. We did.
Very strong today. The yen weakens below 153. Now, 152 had been the number that we had been kind of keeping an eye on in terms of possible intervention from the monetary authority in Japan. So that's one thing we're going to be looking at overnight, whether the monetary authority, the Ministry of Finance, comes in to support the yen by buying yen and selling dollars.
What do you think about the meeting between, out of the White House, Japanese Prime Minister and President Biden?
One of the things that I thought was interesting in the dialogue with reporters with the Nippon Steel, U.S. Steel.
Yeah. We talked about that.
He didn't kind of shy away from the fact that maybe it's not American-owned, but he is, in an election year, standing firmly with the union, the United Steelworkers. Now, so far, I think the wild card in all of this is the union. They have said that they did not appreciate, can't they remember exactly how they phrased it a couple of weeks ago when Nippon put an offer on paper as to what it wanted to do. $1.4 billion in CapEx and an honoring of the current labor agreement that the United Steelworkers has with U.S. Steel. Right. I think the union called it a worthless piece of paper or something like that. Okay. So this has to be negotiated.
Well, Carol made the point of, when we talked to Joe Doe about this earlier on our program, And Carol made the point, at what point does the deal not become worth it for Nippon Steel? Because the union is asking for so much. And they're saying, wait a second, this doesn't make sense.
I think we're a long way away from that,
Meaningless
perhaps.
piece of paper.
I thought it was
Nice
something like
job.
that. It was
Anyway,
reaching
forgive
for
me.
it.
Sorry.
But now the U.S. Steel shareholders will vote on the proposal Friday.
Okay.
CFIUS, is still looking at this under national security grounds. But here you have a Japanese firm, an ally of the United States. And if you look at what Kishida was saying the other day, already Japanese companies are responsible for putting 1 million American workers to work.
Yeah.
We have a number of Japanese auto manufacturers that are in this country. Now, the steel industry, this is a whole other conversation right now. I know initially because Nippon has some exposure to China, some of the critics of the deal were looking at that connection and saying that's enough of a reason to kind of not allow this deal to go through.
I don't know. I feel like Joe gave us some good perspective about the importance of U.S. Steel. What's interesting is that, the potential of could Nippon Steel buy it but continue to operate it over here in the United States, keep the facilities and the plants here, the workers here in the U.S. Could we see a deal that's how it plays out?
Right. But the union is going to want assurances more than they've already been given that, the contract will be honored and any future labor agreement is going to kind of mirror what has happened so far.
The presidential election really throws a
So much,
real
right?
element into this,
All right. Yeah, it does. Like everything that we talk about, every conversation. All right. Well, you guys have a good setup for the next couple of hours. Looking forward to it.
Always a pleasure, guys.
Doug Krisner, catch him on Bloomberg Daybreak Asia. That's going to do it for